Hey, hey, hey. Word on the street is you should not be using your debit card and you should only be using your credit card. Have you heard the same? Our prosperity partner, Nikki, has, and she has asked me to make sense of some things. So stay tuned on this segment of Credit Makes Sense. Hey, 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 welcome to Credit Makes Sense with Nativa, the frugal creditista, where we talk about money, credit, and everything in between. Super excited to be here with you today as we make sense of a question by our prosperity partner, Nikki, which is, I heard that it's wrong to use your debit card. Is that true? Should I only be using my credit card? So welcome again. If you're brand new to the channel, welcome, welcome, welcome. If you like what I'm laying down, definitely hit that subscribe button and smack that notification bell. And if you are a returning prosperity partner, welcome back. I had to get goofy. But anyway, I wanted to get into today's lesson. Nikki isn't the only one who submitted this question, which is why it was selected. So many of you guys have been asking if you should ditch the debit card in for the credit card and what that means if you don't have higher limits to be able to live off of your credit card. And some of you are saying, what exactly does live off of your credit cards mean? So let's answer that question first. Living off of your credit cards doesn't mean that your credit card is used as an extension of your income or in replacement of your income. It simply means that you are charging to your credit card as many of your expenses and your purchases as much as possible, but you still have an income, okay? And when that statement comes, you are paying off the credit card in full. So it has absolutely nothing to do with debt. In actuality, you are avoiding the debt because you're paying 100% on time, 100% in full. You are building your credit and you are establishing enough payment history, that positive payment history that makes you look more appealing to other creditors and lenders and banks when you decide to either ask for a credit limit increase or go in for other lines of credit or loans that you may need for whatever purpose you may need it for. So that's what living off of your credit cards mean. So you're not living off of them. You're simply making as many purchases as possible with them. And there are some perks to that, as I mentioned before, not only with establishing a solid, positive credit history, becoming less of a risk when you go to apply for other lines of credit. And you are also being safe, because right now I have mentioned to some of you who are on my email list that every time I go back to Chicago and I swipe, soon as I start traveling again, I notice that there is a charge that I don't recognize. So that's why I have completely ditched the debit cards. And I have only gone credit cards, especially when I'm traveling back and forth, just because of the safety feature, because identity theft is real and rampant. It does not matter if you have excellent credit or bad credit, they will get you, okay? Look, I have had issues with that debit card from across the scale, from fair to excellent, and it's still happening. So that's why, and the last time it happened was about 2 years ago, and I just ditched it completely. I very, very rarely use a debit card. So that's another feature, the safety aspect of it. Now, before you get to the point where you are living off of your credit cards, I want you to understand a few things. We already explained one, you ain't living off of them. That means you have a strong, solid income. You're paying the statements 100% on time, in full. You're not leaving a balance over to the next billing cycle, because our goal is to earn income off of our money prosperity partners, not to pay it. So you are not charging or swiping anything that you will not be able to pay, either before the statement comes or when the statement comes. Number two, I really only want prosperity partners who have strong, solid budgeting habits, money management habits, spending habits. If that is not you, you should not be doing this. Your method of using credit cards should be very pre-planned, very strategic, and solely based on what is on your expense list, so that you can charge it, and then as soon as a statement comes, you can auto pay it. You eliminate you having to make the decision of if you want to pay it in full or not. As soon as that statement comes, it automatically knows to go into your bank account to draw that money out. So you're eliminating the temptation not to pay it in full and not to pay it on time. Okay, so you probably will not be using your credit cards for entertainment, okay, because you haven't developed that spending habit yet to say, hey, I'm only going to spend this much and I'm going to make sure I pay it as soon as that statement comes. You probably won't use it for groceries. For you, I would probably do a cash envelope type of deal, or we would have an account that's strictly for groceries and for those type of expenses that are variable and that relies on you to make the decision of when you're going to stick to the budget amount that you have pre-planned, preferably on paper or with an app or with an Excel spreadsheet, whatever. But essentially, if you know that your habits aren't up to par or you don't have a budget at all, then you are going to want to not put this living on credit cards thing into practice until you develop those skills first. Otherwise, you're going to find yourself into some debt, which is not what we are on Prosperity Partners. We ain't having that. So a couple of things I want you to put in place. Number one, budget got to be on point. It has got to be, it has got to be, it has got to be. If you recently took my Boss Up Your Budget class, I did a whole 4 or 5, actually it was probably about 6 or 7 day challenge. It was lit. And I literally wanted, my main purpose was to put you in the mind frame of the boss over your household finances, the CEO, channeling your inner CFO and getting that on point. So you've got to know the income that is coming into your household, as well as the outgo, where that money is going, and then get in the habit of spending with purpose and on purpose, and making sure that your spending habits is in alignment with where you are going, what your goals are, what your vision is, etc. And then credit cards just support that. That's all it is. It's just you're including that in that plan that's already set in place. All you're doing is switching out that debit card, switching out paying that bill directly. You're sliding that credit card in there. And then instead, the payments for that credit card are being made directly to the credit card. So the bill is being paid on a credit card. The money that you have set aside for that bill is now paying the credit card. There's no added interest. There is no added fees, and most importantly, there is no accumulation of debt. We are about the accumulation of wealth. That's why we are prosperity partners. We partnering together, supporting each other in this movement towards prosperity and wealth as we defined it. So that's the main thing that I want you to do. Number two, you should most definitely have a separate bill paying account. Now you can have what I'll call an anchor account, other people call a deposit account, holding account, whatever. That's where your money gets deposited to. Even I pay myself a paycheck, it gets deposited into that account. And then whatever expenses need to be paid in that specific pay period, that amount, that chunk amount is automatically deposited into your bill paying account. That way, the money is already set aside. There's no dipping in there to paying for other things or, oops, this came up. No. That bill paying account's job is solely for paying your bills. Guess what that bill is? It now is going to include that credit card that you squeeze into the mix. So until you have the budget on point, the bill paying account already set up, you know what is coming in and what expenses are going to be paid within that pay period. Do not use that credit card yet. You have to set this up before you insert that credit card into the mix. Once that's set up, you'll know, okay, I get paid. Let me see, what's this Friday's date so we can be very specific. I got paid on the 18th. I know that out of this particular pay period, rent is going to be due on the 1st. My next paycheck is going to be on the 4th. You're going to have a solid look, even if it has to be inputted on a calendar or something like Google Calendar, which I personally like. But you will know what bills are due between the 19th and your next paycheck on the 4th. And all of that is going to be placed inside of a separate account. And then you're going to have a list of whatever expenses that you can pay with that credit card already mapped out. You're going to auto pay that bill on that credit card. And you are going to know, not only you're going to set up where it's paid, but you're going to know when to pay that credit card. And I'll get into that a little bit afterwards. So that's that. Knowing which expenses you can pay with your credit card, knowing when they are due for each pay period. So when you get that check, you automatically know what bills you're going to have to pay. No more uh-ohs. Okay, we talked about that a lot during the Boss Up Your Budget Challenge. And another thing I want to mention is that it's completely okay to pay before your due date. I'll never forget in one of my workshops, they were like, why should I pay them early? It's not about paying them early. yes, the due date may say that something is due on, I don't know, the 22nd of every month. However, if you know that you got that statement on the 3rd of the month, right? You got the statement on the 3rd, it's due on the 22nd. These are random dates, okay? You got it on the 3rd, you're doing the 22nd. You got paid on the 18th. Go ahead and pay it on the 18th. Why wait till the due date? I mean, it's still due. That's just the automatic, that's the deadline. But how many of us like things done before the deadline? Remember, you want to pay those bills on your schedule when it's convenient for you, and then knocking it out and getting out the way allows you to know how much income you have left over, what maybe a variable expense maybe was a little bit higher than you expected. Do you have a little bit more cushion that creates a little buffer in your budget? All of that good stuff. And if any of this sounds strange, I'll leave the link to the Boss Up Your Budget Challenge. I'll leave the discount down there so you can take the class that we had that literally walks you through all of this. But essentially, that is what you are setting up before that credit card even comes to the mix, okay? So it's okay to pay the bill before the due date as long as it aligns with when you get paid. Because as a boss of your own finances, you determine when it's most convenient for you to get paid, and you also can move some due dates around to where it's more convenient for you in your pay periods, okay? Also, please know what expenses you can pay on your credit card. I'll never forget when we were having one of our online workshops, and one of our students was trying to pay, I think it was her mortgage with a credit card, thought she could, even accepted the information, which is weird. Usually won't even accept it, but accept the information. She thought everything was cool. And, you know, she had a missed payment now with a fee. She was able to get a reverse because they shouldn't have even had that option for her to input that information in there. But essentially, you want to know well ahead of time of what expenses can be covered with a credit card and which ones cannot. So if you need to only spend with credit cards that are online, well-planned, well-budgeted out, that is still completely fine, and it still allows you to build rewards and to build positive credit and all that good stuff. So that is fine. If you already have great spending habits, you can go into a grocery store and say, you know what, my budget's 300, and you know you're coming in at 300 or even under, and that's how you are with your budget. You are on it, and you can use it for variable expenses. You can use it for pre-planned expenses. You can use it online. You can use it on offline. You can use it on travel, which I strongly recommend, and all that good stuff. And you know that when that statement comes, you're going to pay it off in full, on time, you're good, then go ahead, get that credit card in there. But if you're not, do exactly what I just told you to do. And you also want to know your credit card's billing period and payment due date. So one of our other prosperity partners actually gave me a snippet of her statement. So give me one sec, let me share that with you guys. So these are her billing statements. And as you see here, the one from August to 21st, that's a 30-day billing cycle. November 22nd to December 22nd, that's a 31. And then of course, since February is a short month, that one is only 28. But essentially her billing cycle, which means the cycle in which all of the payments and charges are being accrued so that until she gets this bill, that is between, let's see, the first one, the 23rd, and September 21st. September 21st, she is getting that statement, or maybe even the 22nd, and it's saying, hey, these are all of the charges, these are all of the payments within this 30-day billing cycle. And then on the 16th of October is when your payment is due. And as you see where it says payments, she made the payment well before her bill came out. So essentially she got the points, but she did not get the debt. So when October 16th came, it was a zero balance. She did the same thing for the next one, which is November 22nd through December 22nd. That was a 31 billing cycle. She did not do the same for the January through 23rd through the February 19th. There was a balance of 3708. Based on her credit limit, her utilization is still under 20%. It's a little over 10, so it's under 20% though. So her utilization on this one card is still okay, considering that she has a zero balance with the other credit cards that are reporting on her credit report. So what do I mean by charging within the billing cycle? If this credit card, this particular Venture One credit card of hers had a $10,000 credit limit, right? And let's say that she charges about $5,000. You don't want all of that $5,000 to report on your credit report, because that is a 50% utilization. You want well under, and then if you have other balances on your credit card, you perhaps even want zero. So you really got to be mindful of the utilization and current balances on your credit card, because I see a lot of people trying to live on their credit cards and following that advice when they already have current credit card debt that they need to be paying off. So before you go into this, let me live off of my credit cards, you need to get out of debt. We do not want debt, okay? Prosperity Partners, get out of debt. Yes, I love the whole points, the rewards, the cash back, the travel, all of that good stuff. However, when you are paying on average 17% or more in credit cards interest rates, that is a lot, and that is more than any reward system will get you at this time frame. So at this point, if you're in that boat, I really would like you to apply all of that to your debt, trying to reduce expenses, make more money. I'm big on making some more money, okay? Making more money and literally getting out of debt, okay? That's what I want our number one focus to be within. But essentially, if you're here where you're generally carrying $0 on all of your credit cards and you kind of just rotating them and use them as living expenses, then again, I want you to know what your billing cycle is. So you know that around the 22nd is when it starts, and around the 21st, unless it's February, it's going to end. Then that means that any charges you make between that 30, let's just say 30-day billing cycle, you know that you're going to want to have it paid off in full no later than it's going to be due by the 16th for the previous month, but for the current billing cycle, you're going to want you're going to want it paid off before at least the 18th. Okay. Why is that? Because you don't want high utilization reporting to your credit report. So even if you can pay it off in full when the statement comes, you still don't want anything jacking up your credit, which is all of those charges that you made during that billing cycle that may put you over my preferred 10%, maybe no more than 20, but definitely well below 30%. You don't want that on, multiple credit cards that you may be doing this with. And so therefore you want to kind of create your budget around the point where you are paying it off completely, so that typically only 1 to 2 credit cards will have any type of super low balance reporting for credit card purchases, while the charges you make throughout the month will help you for whatever reward system you on, and really just establishing a solid credit-based relationship with whatever reputable company you tend to have a credit card with. Why do I say reputable? Because there are some cards out there that they don't offer anything else but their little credit card, okay? That's all they offer. Whereas you have bank cards where you can get multiple products from. You can have a business account with them. You can have business lines of credit. You can have, business credit cards, business line of credits, personal loans, business loans. You can do multiple forms of lending activities with them that align with your goals. Whereas you have maybe what's another card out there that doesn't have much? Only thing I can think of is Open Sky, but that's a secure. But if you have a card that's like that doesn't let you do anything much with it outside of just that credit thing, what's the point of establishing a long-term relationship with them? It builds your credit. It's a gateway for that. But essentially, you want to move on to other better forms of credit that are going to allow you to really establish a solid relationship with them. And I'll be honest, let me stop sharing right quick. The best relationships to establish with as far as banking are really community lenders. Even when my credit was not the best, just by having a good relationship with my community lender, having good money relations with my community lender, they saw that I had money. They saw what transactions and what deposits were being made. They saw that I was saving my money. And they saw even on the business side what was going on. I was actually able to get lending without not very good personal credit, no business credit established, and just because of the money that was going into it and my money habits. So community lenders are the best. Also, if you do a lot of real estate business or business period within your local community, you bank in that community, the local politicians, the aldermen, state reps, and all of that, and you're going to a lot of the community events where you're familiar and networking with some well-known community leaders in that company, and then you also bank because a lot of the community lenders often show up to those networking events. Guess what? Community relationships, networking, money, and assets are literally the best ways for you to build banking relationships versus credit cards. So that's why I say it really depends on what your goals are, what your moves are, and all of that good stuff. But essentially, no matter what, if you're looking to build an established relationship with a bank, you want to make sure that the credit is on point personal wise, And even if it is not, to make sure your money habits are on point, no overdrafts, no zero balances, none of that stuff. You want to let them see that you are well worth the risk of any home equity line of credit, of any credit cards, personal loans, business account, business credit card, anything that you want to make sure that you are a solid risk. And so they're not just looking at how you are maintaining your credit card. They are looking at the entire banking picture. How are they managing their personal credit? How are they managing or building their business credit? How are they managing the loans that they currently have? How is their business doing? Who do they know, and how solid of a business or well-known or viable is this business? And you can do this with your records, but again, if you're a community-based business, then it's so important to establish that business relationship with a community bank as well. So, well, this veered off. Hopefully that was hopefully that was informative for you guys. It's I really made sense of some things, right? But essentially, you only want to use that credit card like that when your money skills are on point, your spending habits are on point. And if it's not, then you want to make sure that it's only online, well planned, and you have removed yourself from having to do the swipe because everything's online and automated. You want to have that separate bill paying account. You want to know what expenses you can actually swipe with and pay with your credit card. You want to ensure that you are paying within that billing cycle so that you're not destroying your credit by having large amounts of utilization report, but you're having it paid off or paid very low, so that when that billing cycle ends and it does report to the credit bureaus, and it will report. Let me bring up that snippet right quick so you can know when to report, because I didn't mention that. Let me see. So it's going to report, I don't know if it's showing to you guys yet. Is going to report whatever balance on September 21st. And it typically will report, it'll show up, they report once every month, most major lenders. They'll report once every month, or whatever the balance is when that billing cycle has ended. Here, the top one, September 21st, the middle one, December 22nd, the lower one, February 19th. Whatever balance is on the card at that point is what's going to report. So you always want to make sure that it is as low as possible, because we are not trying to get high utilization and tank our credit scores. No. All right, Nikki, hope this was informative for you. If you have any other questions, you can pop them down into the description. I also left the link for you to submit your question that you'd like me to make sense of. And I also left the link to the Boss Up Your Budget class that I did. It's a discounted link for you guys. And of course, I welcome any other comments, any other feedback, what has worked for you as you are playing this reward system game. But I will state this: the goal is not to accumulate debt. It is simply to establish positive payment history, to be more safe out here, because when things happen to your debit card account or your debit card, that's your money. But when it's on your credit card, you have the whole card act that protects you from any fraudulent charges that may occur, so that it's more safer for you to use as you're swiping, especially for travel and actually anywhere, because people are just crazy when it comes to this ID theft thing. And so it is a positive. So it's all about making sure that you're not driving yourself into debt while you are being out here being safe, establishing a more solid credit payment history, and building a solid relationship with whatever bank that you have the card with. So hope this helps. I will see you next time inside of our next Credit Makes Sense video. Chat soon.